So we've got three basic objectives for this lesson. The first objective is understand legal structures of business in the United States. The second objective, understand advantages and disadvantages of each structure that you may use. And the third objective is to be able to choose an appropriate structure for your project or business. And so as we move through these, consider these objectives and think about how this may help you in your project or your business. So one thing you'll want to keep in mind is that all the authority for business emanates from the Constitution. So it mandates or it allows you to create your business. The federal government permits the states to manage how small business works within the state. There are some advantages on the federal level, but the state really manages small businesses. And each state, this varies sometimes a little bit, sometimes a lot. So you need to make sure that you pay attention to what state you're in and how the specific management of small businesses happen within your state. So the first thing we need to consider is how we're going to organize your leisure or parks and recreation business. First thing is talk about is control. Who owns and controls the business? And this is going to be determined by the structure itself, if you're a sole proprietor versus if you have partners, and also how you structure the business within the state that you're residing in. Liability. Who is responsible if the business fails or has losses? And this could be a wide range of things. And again, a lot is determined by the structure of the business. And there are some advantages to certain structure types. But up front, you want to make sure you know who that person is if the business has losses or fails in some capacity. Then we talk about continuity in the future and transferability. And this is basically looking at, is there a specific time limit that the organization or the project or the business is in place? Is it going to be terminated at some point, and how might that be terminated? If not, think about selling the business. If there's a partnership, how might you sell different aspects of that partnership if one partner wants to leave, or if you want to bring additional partners in? You need to keep these things lined up in front of you and understand that typically in a partnership, at some point, a partner wants to leave, or you want to bring in somebody else. Maybe they have specific expertise or whatnot. So have the ability to be flexible with either terminating or expanding partnerships and the business in general. And finally, something that we all have to be aware of, and this again varies by state, is how are profits and losses of the business taxed? And most likely you'll want to work with a certified public accountant once you start your business, or maybe even a little bit before, and start to understand how certain profits are taxed and how losses may be accounted for in different taxing systems. So within every state, there's going to be a whole host of different business structures that are available to you. Here you see a matrix of different types of businesses, and you'll see on the left there's difficulty and cost to form, to maintain, liability of the owner, tax preparation issues, flexibility of bringing in new owners, which we talked about, and cost of terminating a business, which all these things are things you need to consider. So with a sole proprietorship, it's a relatively low cost to form and low cost to maintain, but the liability is pretty significant for one person. Again, it's low difficulty on tax preparation, pretty flexible on bringing in new partners, and pretty low cost on terminating the business. All the way to your S corporations, which as you can see, the liability for the owner or owners is low, but the difficulties for maintaining and forming the business are higher, and the nuts and bolts of the tax preparation, the flexibility of bringing or eliminating partners or terminating the business is much higher. And so each of these has pros and cons, if you will, and you just need to understand what pros and cons you're willing to deal with for your specific entity or your project or your business, and select the right business model. So here we're going to look a little bit, have a little bit of inspection of each one. So we got sole proprietorship, and basically this is the simplest and most common business form. It's usually you as an individual are the owner of the business. In some states, depending on where you might be, Maybe a husband and wife team could be a sole proprietorship, but you still basically have one person that is the business. 80% of all businesses out there are sole proprietorships, but that number is declining with different things happening in the economy and different types of other structures that are available. But about 80% of the businesses that are currently in place are sole proprietorships. However, 80% of the businesses out there are sole proprietorships, but sole proprietorships only do about 10% of all the dollar value of business in the United States. So while they're a large chunk of the businesses, they're doing a very, very small amount of the business in the United States. So there are a couple things to keep in mind as you start getting your sole proprietorship started. First thing is open a separate bank account. This will allow you to keep track of your business's finances and keep your expenses and revenues connected to your business. The one thing you don't want to do is get your business finances intermixed with your personal finances. A good idea and something that's very common is to have a completely separate bank account at a completely separate bank. So you have a different entity, a different account, a different setup between your personal and your business finances. It's recommended that nowadays you have a bank with a strong online presence so that you're able to manage your finances wherever you may be. Second aspect is to choose a name. Some people just choose their own name. Others choose a flashy name. You just need a name that works for you and is allowable within your state and is not taken. So check in to see what names may be available for you through your small business administration within your state government. And then choose a name that is relevant and reflects what your business is. Third thing to bring up is you need to obtain the certain licenses and permits. What you'll want to do is there's certain business licenses that you need to get depending on those depend on your state. You need to make sure that you're in the correct zone for your business. This is going to be down on the local or community level. Make sure your zoning is in line with your business type. And then you'll want to register the correct tax documents. And this is maybe where you might want to get some legal help and a CPA to help you as well. Sometimes the Small Business Administration will have setup clinics or different clinics that allow you to help get through this process. But basically, you want to make sure you got all your T's crossed and get your tax registrations ready. Make sure you're in the correct zone for your business, and make sure you have the correct business license that apply for your business. So with every structure, there's pros and cons, and so sole proprietorship is very similar. So one of the benefits is that you are the owner, so you have all the control. The downside is you have all the responsibility. So while you may have the control and you have the say-so of exactly what happens, you also have the legal responsibility for everything that has happened, even with your employees. So every decision that is made, from you to your employees within the company, it's your responsibility to make sure that everything is legal and ethically conducted. Also, you have unlimited personal responsibility for your business as far as liability. What I advise is to make sure you purchase insurance that may cover many of the common risk. Insurance is available in a variety of forms for a variety of reasons, and they, just depends on what business you are in and what kind of business you want to construct. But go out and seek out and see what type of businesses or see what type of insurance is available to you and what the cost may be, and build that into your business model. So your sole proprietorship will continue as long as you are alive. Now you can transfer the business, you can sell portions of it or assets of the business, and so you can reap some benefits by selling certain aspects of it. Taxes, as far as taxes are concerned, the federal government sees this as your business, and all the income from the business is applied as an individual tax rate. There is no separate federal tax form required for this. You are the business, and that is your income. Okay, so let's recap. What are the benefits of having a sole proprietorship? They're inexpensive to start, so they're relatively cheap to begin. They're simple to run. You're the boss, right? So you don't have to answer to anybody. You make the decisions. There's no double taxation on profits, which may be the case in other structures. We'll go on down that road here in a minute. But it's only taxed once. It's your income. There's limited governmental interference because you are the business and it is yours and all in one thing. There's limited government interference. The disadvantages: you have an unlimited liability for the business, meaning if the business fails, you fail, or if the business gets sued, you get sued. You have unlimited liability. The business has unlimited liability for the owner's personal liabilities. The ownership is limited to one person. So at any point you want to sell your sole proprietorship, there's going to be some hoops you have to jump through. You cannot bring in any partners in under a sole proprietorship. You have to change your business structure. And also, you have limited access to capital. So when you talk about maybe a capital loan from a bank, you have limited access when compared to some of the other structures for your business model. So to round out the sole proprietorship topic, we're going to show you some different forms you may need for taxes. So on the federal level, you need an individual tax return form. There's different schedule forms for profit or loss of a business. There's a self-employment tax form. You can also fill out, you do estimated tax for individuals. There's a depreciation and amortization form. And there's expenses for businesses' use of your home. So if you use your business or use your home as your business site, you need some different forms. And then you can click on that little link down at the bottom where it says employee tax forms and go to a neat little website, and it'll help you get further down that road if you need to go. So we're moving on. We're going to talk about partnerships next. A partnership is two or more individuals running a business. There is no limit to this. There's not like a 2 to 5. It can be 2. It's just simply 2 or more individuals. Now, partnerships only make up about 5% of all the business in the United States, and that is actually going down. And they only do about 5% of the dollar value of business, and that's about steady right now. So businesses, there's only 5% of the businesses are partnerships, and they're only doing about 5% of the dollar value. So there's not a whole lot of these out there. The key to partnerships is they're contractual. There's a verbal and a formal written agreement between the parties going into the partnership, and this is very important to have this nailed down so that you know exactly who's responsible, who is in as a partner and who is out, and what their stake is, so on and so forth. You might get legal help to help you out with that stuff.